And right now, as we do each and every Thursday, folks, at 30 past the hour, we're going to talk to our man, Tim Ord. You can reach Tim at his website, ord-oracle.com, every trading day. And don't forget, under the Services tab, right at the front page at TFNN.com, you hit that Services tab, 2 outstanding webinars, The Secret Science of Market Tops, as well as 6 secret ratios every trader should know with Tim Ord. Tim Ord, good afternoon.
Good afternoon. Good afternoon. So here's what's kind of going on. This first chart is the 10-day average of the trend, and anything above 10-day average, so that's 2 weeks of trading. So anything above 1.2 is bullish. Anything below 0.9 is bearish. We're coming in. When I did this a couple hours ago, 0.89, and this one down here is a 5-day average, and it's coming in 0.9. And I listed, so this tan area, or pink area right here, and this pink area right here are times when the 10-day average of the trend is below 0.9, and the 5-day average is down below 0.9. So anyhow, we got the 5-day below 0.9, we got the 10-day below 0.9. And then went back in history. This chart goes back to basically close to a year. So marks all the times when those indicators, they pretty much line up the same time. I should have probably done the 5-day too, but in general, they kind of warn of a high coming if they not pick out the pretty high over the last several months. It kind of warns you the highs coming here. I was hoping that we'd see some strength in the trend as we got a buy signal here a couple of days ago. Not a real good one, but I thought it had strengthened if the market was going up. Sometimes these trends go up along with the market. That did not happen here. So I'm going to sell my position on the close today. I made probably going to be around 0.5% or so. Nothing great, but this is another indicator. Can
I ask you when you jump in, just how long? Because I can definitely see it, right? In terms of that dip as they dip lower, and it doesn't guarantee it, but you can see it, and sometimes you get in a run up ahead of time. Is there any amount of time that you look for a pullback or a stall out, or because this market has been pretty relentless, right? And I understand you're not necessarily going short, and those pullbacks aren't steep, but they're on that chart. Wait, do you look for a 5-day, a week? Is this a pause? How do you think about something like that when you look at something like this?
It's kind of hard to say. Next week is expiration week. Just what it does takes quite a bit of energy to the upside. It doesn't really go down sometimes. Sometimes it does. This time here, it really got low, and you got that. And this kind of lines up with that. And other times it's just a minor consolidation. Those were kind of minor. Sure. So it just takes a lot of energy out to the upside. So can it pull back significantly? It can, but a lot of times it just says, there's no energy here. Basically panic's energy. And ideally you'd like to see a trend up around 1.2, and you get 10 days, or you get 2 weeks of that. That builds up quite a bit of energy for the market to rally in a couple of weeks. Here, can we rally into expiration week or move sideways? Maybe. But I bet 2 weeks from now, we're not too much higher than where we are right now, if we're higher at all. That's how I kind of determine it. So, but panic's good for the market. And right now, there's just really no panic at all. So it's we can wiggle up maybe, or maybe we just wiggle back down. I don't know. But here's another thing. This is the SPY VIX ratio. And this is the SPY. Over the last several days, market's gone up. This ratio is going down. I got a bullish signal here. It's one of the reasons why I went long, because market went down. This ratio actually made a higher high. And so, okay, we're going to get going to the upside. Well, we did go to the upside, and the ratio turned right back down again. So it's kind of a, worthless market. We had a trend tick reading here not too long ago. I guess the day I got long. So I'm out. It's just, in the volume, I don't think we'll be lucky yesterday to match yesterday's volume. So nothing really to talk about here yet. I think things will still get interesting this month, but the market just kind of staggers up here. So it's do you want to go short? No, I don't think so. This is really a strong market. internals. We're just in a bad time of seasonality. September, October are probably they are two of the worst months of the market percentage-wise gains, or maximum losses. A lot of times big declines come in September, October. So we're kind of into that time frame. So I'm just being kind of careful here. But if we do get a pullback, there's a lot of momentum to the upside. Bigger trend's bullish. Just a short-term trend is not ideal. So let's take a look at the gold market. I brought this up on before. This is the monthly HUI NDX ratio. So you're measuring the gold market to the equity market. And this is what happened going back to 92, but this chart looks like it starts around 96. And there's potential for a 12-year cycle here. You only got two times before, but it worked out pretty well. What I like about it is this big run up we had. This is a sign of strength off of a low. Anytime you have a sign of strength off of a low, this is the first time this RSI, we're around 68 right now. But if you have a sign of strength, basically RSI can measure a sign of strength off a low, because we're not dealing with volume here, but there's other ways to measure momentum, and RSI is one of those ways. And last time we got up to this high came off the 2000 low, and that RSI stayed above 50 going into 2011, 2012 high, then finally fell back down, then basically stayed below 50 from basically around 2011 until 2024. Mid 2024, looks like August or something, we got above it. So I'm thinking, so that hasn't happened since 2012. So we stayed below the RSI for almost 12 years, and finally we got above it. So I'm thinking this is initiation of an up move. I think the equity market may go up, but won't go up as fast as the gold market, is what I'm saying. So anyhow, so I'm thinking there's a character change too. I was short GDX here a couple of months ago. I can't remember exactly when. And those indicators in the past have worked over the last, whoops, here's the music. So
that's all right. We'll finish it up, all right? We're going to talk some gold, folks, coming up after the break. We'll finish the conversation with Tim. And, this gold market, you talk about it. Where are we right now? Let's pull it up. We got gold. 38.81. We hit an all-time high in the futures, 39.23 today. We'll come right back with Tim. Stay tuned, folks. Welcome back, folks. We have the S&Ps selling off a little bit. Still positive by 2 points, but a little bit of sell in the last few minutes. Gold right near record highs, and we're talking to our man Tim Moore. Don't forget, you can reach him at his website, ord-oracle.com. And as you were saying with gold, Tim, go for it. I know we jumped right into the middle of that break. Go for it, please.
All right. Anyhow, I want to point out this too. This is the first time we made a higher high on this ratio, HUI-DX ratio. Actually this month. So now we're breaking higher highs. Before we always made lower high, lower low, definition of a downtrend for the last 12 years. And finally, we broke above some previous highs. So kind of reinforces the idea that the gold market is here to stay, I think. Can it be a 12-year cycle? It's hard to say. I would say yes, because I think this is quite a coincidence that this pattern worked out so well. I actually had this drawn before this low actually happened, and it turned out to be right on the money, pretty much. So anyhow, I think it's working. It'll work until it doesn't work. And one reason that it may not work is with the RSI up in this window here. We fall, say we fall down to around 30 or something, or 40, or 45 is kind of no man's land. But we fall down around 35 or something, or close to 40, then that may blow this cycle up. I'll put it that way. But as long as this ratio holds above 50 range and bounces around, I think this uptrend will continue. So that'll be one thing. So I'll be watching this RSI, how that performs. So, but anyhow, I think we're in early stages of bull market, and there's quite a few reasons to suggest that. This is a monthly XAU gold ratio. So you're measuring Gold stocks against gold. We had pretty much of a downtrend starting basically in 2000 as far as the ratios goes. Well, anyhow, this ratio is pretty cheap. So it's been bouncing around like approximately 0.08 is the high, 0.05 is the low, and we're up around close to 0.08 right now. I don't think it's actually going to stop there. What I think we're going to do is go right up to these lows back in here, and what happens there, I don't know, but I'm thinking that's what's going to happen, because I think this rally is, I think it's initiation, a sign of strength off of a low. They usually don't blow out. They have consolidations, but I think this ratio is going to keep going up. So I think we're going to break out of this sideways trading range that we've been in for the last 10 years and start to break up. And it's about due time, too, because a lot of these previous ranges, some lasted, this 2-year range, a 4-year range there, a 6-year range there is a 2-year range. So we're due something different than this 0.05 to 0.08 range. I think we're going to break out.
And what's crazy is not crazy, but it's remarkable how even on the point you're talking about, it could break to, that would be almost like doubling, right? From almost where we are now in terms of the relationship, the XAU to gold.
Right. If
almost
gold if gold just stayed where it is right now, to get that ratio, I don't have a, to get
pretty
that
close.
Ratio, if gold didn't even move for the next several years, and this ratio went to 0.175, that would mean the XAU would have to go, it's approximately around 300 right now. It would have to go to 600.
Yeah,
so
that's
right.
Which is wild, man. And hey,
so that's
for the run we just had, well, why not, right? We just went from 100 to 300 from last year. So
yeah. So I'm thinking these golds, where is there other a penny market? I don't, there's no other penny market, I think, other than these gold stocks, but we'll see how that works out. But yeah, you're right. Just without gold moving, this ratio goes, if it does go to 0.75, if you do the numbers, then XAU would have to go to 600. So I know it could be very interesting.
Just talking about even a gram of gold right now, right, is like $137 at the price. 1 gram of gold. Remarkable, man. I was looking at that even.
Another thing, nobody's talking about it. You're not hearing the, on the news or anything, which is really good. When they figure it out, that's usually a time you got to treat out. And I'm not even hearing anything. And this is one of the best, probably the best market percentage-wise out there of all sectors over the last 12 months, and nobody.
It's been
cares.
An amazing run, man. It has.
Yeah.
It's I wonder myself, just thinking out loud, right? In terms of people, you're saying we're not hearing a lot about it, and I agree. And I wonder how many people know actually how much gold they have right now. When you look at even a gram, folks, is $140. I mean, when I'm dating myself, but not that long ago, man. When I graduated college in 2022, Tim, a full ounce of gold was just $220 or something like that. I remember it was right on the time, and now a gram is $140. Remarkable.
Yeah, it's been. I wish your dad was alive, because he'd be enjoying this right now. He was really into the gold. So,
he would, and he, what was remarkable was, when he passed, actually, that gold was at all-time highs remarkably last year, right at that time, which is amazing enough, even on that day. I remember talking about it, saying, I come back and gold's at all-time highs, and then, hey.
Yeah. It's really something. So we got a couple of minutes here. I want to pass. This is the monthly silver gold. So we're doing a bunch of different ratios, and this is another evaluation. So this is a valuation of gold stocks to gold, and this is a valuation of silver to gold. I flipped it. A lot of times you use the gold silver. Silver gold kind of matches up with the direction of the XAU. Is the reason why I use that.
Yeah.
And relatively speaking, so anything below 0.012 is usually buying. That's at our pink area. I go back to this is 2000 or actually 1982, and anything below it's usually silver's cheap compared to gold below this ratio. Well, this ratio is still cheap. It's still below. When it gets above 0.018, is when it gets kind of expensive, and that's when you get these highs in the market. That didn't high there, but I can't remember what. I was playing gold back in '82. I think this was a high back there too. But silver gold ratios is even still cheap. Silver compared to gold.
Amazing.
So when it gets up here, up in this purple area, are times a lot of times you're going into some sort of a high. So we'll see how that works out. But this is still cheap. It's not inflated yet. So let's look at the real short term. This is the bottom window is a 50-day average of the up-down volume, and we obviously had a surge off of a low. To me, sign of strength off of a low. A lot of times, those things are the initiation off of a low. In other words, sign of strength off a low suggests a major uptrend has begun. And I'm surprised this 2016 range didn't go further. It kind of went up, but that was the final. That was actually the low, and the market did go up. But this one, to get that surge sign of strength off of low, this ratio has to get up around 30, and we hit right at 30 on this last rally. Even though we're way the heck up there, this is another indication that we do have a sign of strength off of a low. So this is still in the early stages, in my opinion, of a bull market. So.
There's a lot of strength, man, and that silver market. Yeah. There's volume in gold, and man, the volume in silver is just remarkable too on this whole way up. Tim, thank you so much, man. Yeah. Great education, great walkthrough as always, folks. Check them out, ord-oracle.com, and check out those webinars on the services tab. Tim, we'll talk to you on Tuesday. Have a great weekend, man.
All right.